Hey there, I want to show you what I use as far as Fibonacci retracements go. I've simplified the process. I've come up with something that I call the Fibonacci window. Now this is a zone where the market will retrace to, and then from there we look for indications that the price will continue in the trending direction. Once the market is in the Fibonacci window, we're looking at a very high probability that the market is going to continue in the trending direction. It's a very easy tool to set up, very simple process. I'll show you exactly what the Fibonacci window is and how to use it, and we'll start that right now. So I've got a basic chart here. Now we're going to find this on any time frame, on any chart. So let's throw on a Fibonacci retracement tool. And I'm going to just drag and drop. Now this is your standard Fibonacci retracement tool. And we've got the top, we've got the bottom, and these different retracement levels inside of the tool. Now what I'm going to do to begin with is I'm going to get rid of this 23.6. I don't need that level. So double click, hit Fibonacci properties, 23.6, delete, done. Okay, so we're finished. Now this is the beginning of the Fibonacci windows. When we're looking for a market to move in a direction, it's going to generally pull back. And at some point it pulls back, and then we're trying to decide whether or not the market is going to continue moving on in the trending direction or reverse. And what I've found over the years is a pullback into what I consider the Fibonacci window is one of the strongest suggestions that the market is going to continue moving in the trending direction. So let's get rid of this Fibonacci tool for now and just take a look at this market movement. We've got a market that starts high, comes down, pulls back, and then continues to move down. So at this point, I'm looking at the market moving down, and now it's pulling back. So I want to determine now whether or not this pullback is sufficient for the market to continue, or if it looks as though maybe it won't. Now, when I draw my Fibonacci tool, I'll start at the top, go to the bottom. So I've got the highest high and the lowest low of this market move. What I'm looking for is a pullback into these three levels, 61.8, 50, 38.2. It does not matter to me whether it gets exactly to 38.2, exactly to 50, exactly to 61.8. That is not consequential. I don't care what number it gets to. I'm not looking for it to get to exactly the 50 level or exactly the 61.8. I know a lot of traders are very precise with these levels, but I found that as long as we get into the window, into this space, and I'm going to draw that with the square here. I'm just going to highlight that window. This becomes my Fibonacci window. So having a market move down and then pull up into the window has me looking for opportunities to continue with the trend. If I don't get a short signal after the price has hit this window, then there's a good chance we are not going to continue with the trend. If the market pulls up and does not get into the window, then I'm not that interested in a trend continuation. If the market gets up to the window and closes past, above the window, I am also not that interested in a market continuation. Once we get up into the window, at that point, I'll be looking for a signal or an opportunity to take a short trade. If we get above the window, not interested. Don't get to the window, not interested. As long as we get to the bottom of the window or anywhere inside of this Fibonacci window, then I'm very interested in looking for a short trade. This is really that simple. Just looking for the space between 38.2 and 61.8 gives me the window that I'm looking for. Let's take a look at this in a long opportunity. So here we've got a market that is moving up and down and up and down. And now we've got an opportunity to look for a continuation with the market move. So we've got this market that moves from down here to up here and then makes the pullback. So at this point, I'm wondering, is this pullback something that is going to warrant a continuation, or is it going to just fizzle out? So I'll add my Fibonacci tool. I'll start from the bottom of the move, go to the top of the move, and then here we're seeing that the price gets into that Fibonacci window. I'll mark this off again just so we can see. Now that the price is inside the window, it hasn't punctured below. It hasn't closed out below. It is inside the window. Once the price gets inside the window, I'm looking for those opportunities to take a long trade. Now you could do that on this time frame. We're looking at the 4-hour time frame on this particular example, but you could switch down to something like a 1 hour or whatever the case is. However your system triggers a long trade in this case would be what I'm looking for. I'm looking for the opportunity to take a long trade from the bounce off or out of this Fibonacci window. And target number one, of course, would be the previous swing high in a long trade or the previous swing low in a short trade. But this is as simple as it gets. This Fibonacci window is a very important tool. I use it quite a lot. I use it all the time, but I'm not that interested in the numbers themselves. I'm not that keen on whether or not it's 38.2, 50, 61.8. Those numbers don't mean a whole lot as far as I'm concerned. It's this zone. It's this area that has the optimum potential for a market reversal. If you look for trades on your charts, you're going to find over and over and over that the price will get into the zone, not get beyond it, and then continue. This is something that you could do on any time frame, 5 minute, 15 minute, all the way up through to the weekly or even the monthly. So that's it, the Fibonacci retracement window, Fibonacci retracement zone, that space between 38.2 and 61.8. That is my buffer. Price gets into that window, I am instantly looking for a resumption of the market. If we get beyond that, there's a good chance that momentum is starting to change and that the continuation of the trend just isn't there anymore. The momentum starts to fail. If we don't get quite to the window with the pullback, then it looks as though the market may be topping out or bottoming out, and we're not looking for a continuation again as well. We're looking for the market to start to slow. So that Fibonacci window, for me, is one of the greatest tools that I have to determine whether or not the trend is going to continue. And this kind of retracement is the key to a high probability continuation signal. Thanks for watching the video. If you liked what you saw, click the subscribe link. I'm going to be uploading videos like this. If you want to make your trading better, if you want to be a better trader, consider checking out my website. You'll have full access to me and several different trading systems, very high probability trading systems at forexmasonry.com. I hope to see you there. And in the meantime, you have great success with your trading, and I'll see you in another video.